All right, thank you. Hey, I'm really happy to be here with you guys. I've got some fun things that I want to show you. And here's what I would like to do. I'd like to go through some slides and show you some charts. And then I love to just pull in a charting program and just dig through and teach you guys some of the things that I do. And hopefully you'll find it helpful. But along the way, let me know if you have questions as well. But my plan is to show you about this one chart pattern that changed my life. And when I say that, it really did. It was pretty phenomenal. As a disclaimer, I always want people to remember trading is hard, right? I want you to have realistic expectations. There's a learning curve. I believe if you're willing to do it, there is a lot of opportunity there, but I just want to make sure you know what you're getting into. But what I'd like to do is I'd like to show you the setup that I use, and it really is something that I use for my highest confidence trades. And by that, I mean the ones that we have a lot of reliability, a lot of predictability to this. And so I think you'll like it, but let me show you. And I'll show you how we keep it pretty simple. I don't feel like trading or investing has to be very complicated. And this isn't just a world just for, expert traders. I think it's really common for us to, as individuals trying to trade, I think we make it harder than it has to be. And I'm constantly reminding myself just to, follow the rules, simplify. We get sucked into all the worldwide events and all the things going on. At the end of the day, we can really keep things simplistic, right? And so with this pattern, it's a pattern that I've taught every level of trader, whether it's, let's say, traders that have been struggling for years trying to figure out how to, finally get it and make it work. People that are brand new to the market who've never traded anything. This will work. You don't have to have any, kind of beginning level of expertise at all. But I think a lot of times it's just that matter of keeping it simplistic. These are some comments from some of my students where Pamela in the first month made $711, and this is on GameStop and Chewy. There's David that made $2,200 on a trade that we did in Chewy in 3 days. And these are options trades. You can do this with stock or options, doesn't matter. Rosemary made $912 on just one of those trades. So, hopefully you'll start to see why I have a lot of confidence in this. It's a pattern that I've used for over 20 years, and I've taught it for years and years. And the reason that I continue to do it today and use this pattern today is that it still works. And it's a pattern that I've traded through the tech bubble in the 90s and real estate bubble and on and on and on, but it continues to work. So I'm going to show you current examples of how you can use this. But here's what kind of happened over the years. This strategy picked up a bit of a nickname. And so we just call it kind of cool. I'll show you. We call it the retirement pattern. There we go. And the reason for this is it's a pattern that it's helped and is continuing to help build my retirement. And it is, again, just this more simplistic, straightforward pattern. And it's one that I used to start. When I first started trading, I started with a $2,000 account. And within a couple of years, I turned that into $2 million using this pattern alone. So I think you're going to like it. And I could just ask you, do you guys want to see? I'm assuming you're here, you want to see, right? So I'll show you. And I've got some slides I want to work through here that I can go through it and show you examples and kind of give you the foundation. And then if you guys like, we should still have time. I'd love to run in and just bring in some of my charting service and run through this with you. So if that sounds good, let's start. This is the foundation of the strategy, is looking for stocks that are in strong trends. Now, does everybody here know what a trend is? I'm assuming, but if not, let me give those of you that might be really new or maybe new to charting, let me give you a super quick rundown. What you want is a stock that is making higher highs and one that is making higher lows, kind of like what you see here on this picture. So this is an uptrending stock. And we want something that has a strong trend. And what you're going to notice here is that what happens is within a trend, it gives us this support that we know, we really are on the right side of the trade. It kind of goes back to that idea of, an object in motion tends to stay in motion. And that's really what we have with something like this, where that momentum continues And so we have this stock that, let's face it, it ends up being a little more forgiving. So we're already starting out on the right side of the trade with this momentum that will work for us. Now, the other thing that you probably noticed before is that when a stock is trending, they tend to take these breathers. It's not very often that stocks go straight up or even straight down. And you might have seen lately some energy stocks, some oil stocks that have gone straight up, but they'll only go up for a handful of days, and they will come down at some point. And that is called a retracement or a breather in a stock, where it takes a little bit of a break. Those are really great because what you do is you kind of see that the sellers get washed out. So stock may be trending, you have a lot of buying pressure, and then at some point the sellers, they get washed out, and we see this pullback in a stock. So when a stock takes that breath, right, what it does a lot of times, it'll pull back to a moving average. And so what we're going to do with this pattern is we're going to wait for that stock to take a breath. We're going to wait for that pullback, and then we'll enter on a bounce. Now, what we've done a couple of things. We're getting in at an area where the stock is at a discount. So the stock is less expensive. And if you're an option trader, your options are going to be a lot less expensive. So it's great. The other thing I'll add in here, you're close to an exit. So a lot of times when a stock is in an uptrend, they may come up and they hit a high, and they have a long way to pull back while still being bullish. This is a different entry. So I find that on these trades, they either work pretty quickly and you have a higher upside potential, or you're going to get stopped out quickly and you keep your any risk to a minimum. So you kind of get all things kind of stacked in your favor on this, which I like. Now, here's the thing. You've all seen stocks that trend, right? We've seen stocks that trend up for a while, and then we see these reversals where stocks stop trending. So the key to this, and the secret really, is knowing how to spot the difference between a stock taking just a breath, taking a little bit of a break, or a stock fully reversing and changing its trend, because that happens as well. And you don't want to be that person buying into let's say a bullish stock right before that trend entirely breaks. It's not fun. Often it'll look something like this, right? An uptrend stock may slow down a little bit, and then you get this massive break. And we've seen a lot of that in these markets lately, where the trends are shifting and even breaking and moving in the opposite direction. And so you can use this retirement pattern in a way that you're able to catch this momentum, and then also steer away from those stocks that are ready to reverse their trend. So when you think about it, knowing how to spot that confirmation of that, that breath, or that stock taking that little retracement, knowing whether you've got that confirmation or whether you want to avoid the trade, that really is a big part of this strategy and a big part of making this work. So along those lines, it's really important to learn some of those entry signals. And I'm going to show you what those are today. And a lot of it will come down to just some basic candlestick patterns. But the best part of all this is that you can use this strategy and this retirement pattern. You can use it on stocks that are trending up, and you can use it on stocks that are trending down. So it works really well in either bullish or bearish markets. And the way the markets have been moving lately, and I would expect probably not going to change anytime soon. There's a lot of noise out there, a lot of geopolitical stuff going on. We've got inflation. We've got just a lot that is moving our markets. And what this has done is we have some sectors that are extremely bullish, as you've probably seen. And then we have some sectors that are extremely bearish. And so I think it's really important to have a strategy that really will end up working in both directions that we may see the market move, right? All right, so here, let's go to some of the charts, and I've got a few screenshots here that I'll go through with you, and then I'll bring some other charts in that we can work through as well. So these are actual trades that we've placed here with my trading group. One of them was DocuSign, and you can see here, I'll just bring in the pen and I'll annotate a little bit, but you've got a couple of things going on. For one, DocuSign was in a really strong trend, and they had all of this momentum to them. And you can see throughout the trend, there are a lot of places where they pulled back. We had this nice retracement. The entry that I'm showing you was right here with this green arrow. And you can see that was partway through the trend. So this is one of the things that I love about the retirement pattern is that, a lot of times you may feel like you missed the trade. And in this case, there are stocks that will trend on and on and on. And so it's not like if you didn't get in, way back here at that first retirement pattern that you're not going to be able to make money. Because this trade alone, this one that you're looking at right here on DocuSign, that entry with the green arrow, we exited that with 116% return. And as you can see, again, we were a good chunk of the way through the trend. And I think what makes this work so well is that you're getting in on the breathtaking spot where the stock is just resting for a moment before it takes off again or before it continues the trend, right? So I'll show you another one. And this is SINA. So ticker SYNA, very similar pattern. And this one was in a trend. Now, what happened on this one, a little bit different pattern. We had a strong uptrend. Everything was great, looked really healthy. And we had this pullback. And we entered the trade here because that was our retirement pattern setup. Now, you'll notice on this one, it just kind of floundered for a little bit. And what I mean by floundered, it just kind of went flat and sideways. But the technicals never changed to bearish. And in fact, this never hit our stop. So when you trade this way, we have an entry that's really clear cut and defined. And then you have a stop that also is very clearly defined and it never stopped us out. So we just hung on through some of that chop and then the stock took off again. And you can see here, it really ramped up and continued that momentum move. And so we got out after things kicked into high gear again. There was 173% return. So, and this is a good example of just trading this pattern and relying on it and letting it work and not expecting that overnight you're going to have these massive gains. I mean, sometimes it works out that way, but the reality of trading is it's not always going to play out that you enter a trade and by the end of that day, you're profitable. This is the reality of trading, right? We place our money in the trade, you rely on the pattern and you have your stops and you give the stock a chance to work for you. And so I find that's kind of the reality of what the good traders do. Now, just so you know, I'm not trying to come in and cherry pick all these amazing trades and not show you some of the losing ones because sometimes it's not going to work out. And I'll tell you right now, anybody who tells you that they have a perfect system that they never lose, it's not true. It's kind of reminds me when I was first a brand new trader and I was learning how to trade and I was studying hard. And there was a guy that I knew that showed me, and he was also kind of on the same path that I was. He was a little bit ahead of me though. He'd been trading longer than me. And he would always show me these trades that he would do and where he would buy. And he was always in at the bottom and always out at the top. He was impeccable. So I kept trying to perfect my charting so that I could be as good as he was. I could never quite reach him. But through that process, I got better and better. And that was the time that I talked to some mentors of mine that were really successful in the market. And I learned this retirement pattern and I was able to perfect my way of trading this through that process of me just trying to catch up to this guy that I knew, right? Well, what happened, he ended up, it's kind of a funny story. He ended up telling me that he had bought, if you know options, the options market, the story was something like this. He said, oh yeah, I bought call options down here and I sold them up here, whatever stock it was. It was literally, he bought them at the bottom, sold them at the top before the stock pulled back again. We'll come to find out that stock didn't even have options. So it took me a minute and I'm like, wait a second, the stock doesn't have options. How are you trading options on it? The thing was, he wasn't. So that's when I found out he was completely lying to me. So he was looking at charts after the fact. And he was saying, look, I got in here, I got up there. Why aren't you as good as me? And at the time I was a little bit bothered. But what it did for me actually was it just really forced me to work hard to try to catch up to him. So, clearly that never happened. None of us are going to be perfect. This guy, Robert, was definitely not a perfect trader. In fact, he wasn't really even trading, but he loved to, he was trying and he loved to show everybody these perfect entries and exits. No system is like that. It's just not going to work that way. So that was kind of one of my funny learning lessons, I guess, along the way when I was a new trader. But the reality of trading is you learn a system, you find the setup, you enter the trade and you give it some time to play out. And if you remember earlier, I said that, not everything plays out right away. I said this on our last chart. We had to hold through one of the trades for a little bit before it played out. But the stocks are either going to play out or they're not. And if they don't work, you're generally stopped out pretty quickly. So that's what happened with GE. And so because we enter close to the trend continuation with the stock taking a break, right? So it takes a break and we have a chance to get in. This one, it was 2 days later that the stock broke down and it just didn't play out. And so we lost on this, but we only lost 29% of our option trade. It wasn't much money. And I think that this is the reality of a good system, right? Something that you can make money over time, that has some consistency to it, and that the winners, outshine the losers by far. And if a trade doesn't work out, right away. You don't have to hang on to this for months. Pretty quickly if it's going to work out or not. So this is a really good example of a trade that we took. The pattern didn't play out for whatever reason. It could be, the market shifting, something like that. And we had our little exit right there, right as it broke down below the moving average. So what do you think so far? Like this stuff? Maybe not. If you guys type in the chat box, I'll answer your questions. Here's another example, plug. And this was fun. This was another stock that was in a really strong trend. We had a lot of momentum here. And plug pulled back. This is the retirement pattern area, right? So we had all this uptrend behavior, super great, pulls back, and it took a little bit of a break. It took a few days before this stock kind of really continued the momentum and kept us going. And you can see this one turned into 171% gain. And I'll tell you, it's not that I'm exiting way up here at the very tippy top either. We catch a chunk of momentum and then we jump out, especially in this market right now where things are more volatile. Our trades are probably want them to be shorter. So maybe instead of a couple weeks to a couple months, might be 3 to 5 days or so is kind of what you're getting into some of these trades. All right. Hey, thanks, Alan. I appreciate that. Yeah. So you catch this momentum. The great thing about stocks that are trending, like I said earlier, you don't have to get in at the very bottom and out at the very top. What I want you to think about is catch a chunk of the middle, because even this 171% trade, we were out kind of up in this area here. And then you're always open to re-enter, but that way we were able to bank some of that cash and bring that money back into our account, right? Which is always a nice thing to do. All right, so let me show you a couple more just to give you an idea. This is kind of our average trade and what that typically looks like. So you're looking at, XLY, a 46.5% return. These are all real trades. Target, a 43.75% return. Bank of America, just over 39.5% return. And then we have Toll that came in at just over a 45% return. So that sort of a return, like I said, is really pretty average here. And then let me show you a couple others. Yeah, no, that's it. Yvonne is asking a great question. How do you find the trades? That's always the trick, isn't it? So I'll show you a service that I have here in a little bit, but I have scans and I am running through scans daily to find stocks that are not only trending, because we want trending stocks, but we want stocks that are trending with enough power that they can keep moving, right? So we really want that momentum there. So I have some scans that run in and look through, things like volume and momentum and cash flow. And I use Bollinger Bands and things like that to really help me filter out and get a really good group of strong stocks so that I'm not picking up a stock right before it breaks down and changes its trend. So that's the idea. So I find those, and then I look for those retirement patterns in there. You can see here on Apple, here is a retirement pattern. Now I have a group that we meet every single Monday. It's a great group for whether you're beginning or whether you're really advanced, because I go through my watch list of stocks and I show you what I'm looking at, and I show you the stocks that have momentum and trends. And we do it every Monday morning. So it's a fun group to be a part of. I love it because I get to hang out with other traders. It's like this, I get asked, or I get to answer your questions if you guys are asking anything. It's a good group of people where other traders there will share insights that they've learned and found. So I really like that. But if you look at Apple, this was an uptrending pattern. They had that strong pullback and they ended up pulling back, creating this retirement pattern. And when they created the retirement pattern, what it did was it gave us that entry signal and we had our trade for a while. And then you can see where Apple topped out and they ended up fully breaking their trend. There were all sorts of clues along the way. So everything shifted on Apple for one, when it stopped making higher highs. So it was trying to trend and it couldn't make a higher high. That was it. If anybody was bullish on Apple from this point on, that's the wrong side of the trade to be on. And in fact, Apple's even lower than this now. We could look at a current chart and I'll show you that. All right. Yeah. I was asking, can I please also touch on losses? I showed you that losing trade here a minute ago where we were down, is it 29%, 39%? And I could show you where things shift because it's going to happen. That is the reality of trading. Now, a good system, you're going to have fewer losses. Of course, that's always the goal, but it'll happen. And yeah, absolutely. And here's the thing, like, let's say we had entered this Apple trade right here in that circle. That was one of our entries. We know right where the stop is, and it's right where that line is. It's really going to be right below the moving average. So if Apple had dropped, that would have been our exit. Now it didn't, so it kept us in this trade. But that's the idea, is that immediately, whenever you enter a trade, you always know where your exit is, so you don't have to overthink it. Because how many times do you guys end up, maybe kind of overthinking things, and you talk yourself out of your trading plan? And you don't want to do this. With this one, you are going to plan your trade and you trade your plan and you don't deviate. So we keep it really straightforward. Yeah. All right, I'll show you a couple other charts. We'll move into trading view as well. Let's see. Lars is asking, how do you deal with the high volatility built into the prices of the options, making the price of the options for the most part overpriced? And you're talking about the markets right now. When markets get very news driven, options get expensive, but not on everything. So there are a couple of things that you need to keep in mind when let's say the markets are really news driven like this. Think about the options that are expensive. There's oil and gas stocks. Options are very expensive right now. But the question you have to ask is that volatility that's priced into the options, is that going to go away? Because a lot of times you want your options to be expensive. And I know this sounds counterintuitive and weird, but some of the worst markets I've traded through are flat, sideways, boring markets. Options were cheap as could be, but they didn't move anywhere. So let's just take this. This is it. Well, here, let's see. Let's go to, I've got a couple down trading examples. Let's go to Zscaler for a minute. So let's just talk about this, because let's look at energy, or let's look at sectors that are really bullish right now, right? So let's say you got a bullish sector, something like the chart that we see on ZS, and it comes back. It's forming the retirement pattern. We have an entry signal. Maybe the options are expensive, but guess what? They're likely to hold that value as long as the volatility continues. It's the same thing that you see heading into earnings. Before earnings, let's say if ZS was going to announce earnings this week, their options would probably be more expensive. Market makers just inflate options around those times. Well, is that bad? I actually know a group of traders that will not trade a stock several weeks before they announce earnings because the options are expensive. But I think that's a mistake. Even though the options are expensive, my thing is, as long as the spreads are reasonable, right? The difference between the bid and the ask, as long as they're reasonable, I will never trade anything over a 50-cent spread in the option. You can place limit orders to get filled in the spread. But as long as the spreads are reasonable, if I know that we're in a market, let's say before earnings, or right now where a market's really volatile with news, it's likely to hold that volatility. It's not going away anytime soon. So I don't mind being a buyer of options in these times because we know it's going to hold that volatility. Now, if you take earnings, for instance, you have a target date, the actual earnings announcement. When that comes out, usually the next day, the option volatility decreases. So I wouldn't be so afraid of the options being more expensive. Look at it as you're actually buying something that is valuable and good. Keep it within reason. It may mean if you normally buy 5 option contracts, maybe you buy 2 or 3. So that's kind of how I approach volatility. That run that I talked about, that 2,000 to 2 million, options were extremely expensive. At that time, I never bought an option contract for less than $24, if you can imagine that. So when I look at markets today and, we want to say, oh, they're expensive, not really. If you don't have that value in those options, it means we're trading a market that's flat and we may not see things go that far. So that's one mindset thing for you to think about. And the other thing too, even though things are really expensive, there are some stocks with options that honestly just aren't that crazy expensive. Here, why don't we do this? Let's just jump over to my trading view. Let me pause this for just a second. And I'll show you some charts. I want to dig in and I'll kind of look at the volatility that you're talking about right now. Okay. Let's see why. Here we go. You'll see this right now. There you go. All right. So just to give you an example, by the way, this is TradingView that I'm using. It's a great free service. You can pay for other levels of higher service if you want on this, but I really like the look of their charts. And I love it that I can bring these charts over to my cell phone and my iPad, and it keeps my watch list, keeps everything. So it's really handy. But Chevron is one of my favorite oil and gas stocks right now. So I want to show you this, or even we'll look at Lockheed Martin as well. So what happened here, Chevron came out, they announced earnings back here on January 28th. If I were to back this chart up, which I really would like you guys to do, find a stock, back it up, and then kind of walk forward and see how the chart pattern moves. You're going to learn a lot from that. I found that it sped up my learning curve a lot. Okay. Would you guys agree that Chevron is in an uptrend here? We're going back to the fall. So we've got a lot of bullishness, October, November, December, and Chevron came down. And this is the thing, this right here, this is the retirement pattern setup that you see right here on the right side of the chart. As you look at this, this is a company that has just announced earnings and it threw the retirement pattern. And then it bounced and it's pushing higher. And it's basically continuing the uptrend. Now, I'll show you the downside, like where my exit would be right here. If it dropped any lower, then we're going to take our losses and get out. Now, as far as like the percentage of winning to losing trades, I think you're going to find, depending on your experience level, you'll be anywhere from 40 to 70% winning trades. And I can tell you, one of my students that documented all of his trades and sent me everything year over year, when he hit a 40% success rate, meaning 40% of his trades were working and making money, he was already profitable enough to the point that he quit his job. Now, how is that possible when most of your trades are losing? Think about that. And that's pretty crazy, right? This guy's name is Brett Hadlock. So it's a real person. One of my students said it year after year, still in my coaching groups today. He was able to make this work and make money and stop selling real estate because the winning trades were stuff that you see here. They were trending trades that have that momentum that were working for him. So his gains were really big. And then when the trades didn't work out, his losses were small. So already at 40%, he quit his job and this became full-time. So that gives you an idea of what you're looking at. Now, he got better and better. And I always say your goal should be to get to 60 to 70% winning trades. Not necessary, but he got to a consistent record of about 70% winning trades. Now, there are times and years that it's not as high, but over time, he's been able to maintain a lot of that consistency. Again, just because this is a strategy that you're not limiting your upside. You're going with this momentum. You're finding stocks that are trending, and those trends, they tend to keep moving, right? An object in motion tends to remain in motion. That's the idea. And you know right where your stop is right away. So I'll show you what Chevron has done. We've had a lot of different entries on Chevron, But you can kind of see that first one that I showed you right here in kind of at the end of January on their earnings announcement. Now, we went through a period, they paid a dividend, and energy kind of slowed down, and then it took off again. This is another retirement pattern entry that you see right over here on the right side of your chart. If I put my mouse over it too much, it blocks the candles. I don't want to do that. So you can see, look at what's going on here. Now, when I go current, now I'll come in and draw this out. So you guys know what caused this to move, right? We know it's all of the Russia stuff and what's happening there. But do you have to know that? Do you really have to know what's happening to even be able to make money from this? You don't. Oh, absolutely. I'm happy to answer your question. I love it. I love the questions. It makes me feel like I'm not just talking to myself. So thank you. All right. So think about it like this. We know that there is always news, or there are always reasons that the stocks are moving. But honestly, I think that a lot of times things get overdone. If you're trying to look at the news first, then figure out what stocks are going to work well, and then try to trade off of that, I think you're going to be behind in the trade. So obviously, this is the Russia-Ukraine thing, and we know that that's driven energy prices up. But even aside from that, we had a stock that was uptrending that merely had just a little bit of a drawdown here. It came back near the moving averages, and it started to rally again. This area here is a variation of the retirement pattern. And then Chevron took off. So this is a stock that we've been trading in my coaching groups, and it took off. And I would say really that 140 breakout was phenomenal for an entry right over here. It happened on these couple of days. We had our final confirmation. The retirement pattern was in, the stock took off, and it made this really great run. And it, shockingly is continuing to move. Now, I would say if it weren't for the Russia situation, Chevron probably would have gone up maybe 3, 4, or 5 days, and then it would have retraced again. They probably would have continued their uptrend, but not nearly as dramatic as it is now. It's moving a lot more because of the situation. But if you can just use this pattern and be patient and wait for these pullbacks, would that be okay? And now you end up in this position like Chevron where you can just keep raising your stops up because you've got clear profit, and you just keep raising your stops up day after day. But that's kind of the idea here. Now, there was a little bit of a blip here intraday where all of a sudden a lot of energy stocks started dropping. If some of you guys were watching the markets today, this is just specific today. It's where we came out, and Biden came out and said, well, we're not gonna take any oil from Russia. Well, come on, this wasn't that shocking. We knew this was probably going to happen. A lot of people have been asking for this to happen for a while. But in the stock market side of things, what it does is it causes this overreaction, right? News causes people to freak out. And it's not fun having a bullish position and watching a stock tank like this. This is a 5-minute chart, by the way. So this is now, I've taken today, just so you know what you're looking at. This is the start of today. So this is today's entire trading action broken down into a 5-minute chart. So now it's more granular and we can see what happened. Well, when I showed you the daily chart, Chevron still looks amazing, right? But if you looked at the 5-minute and you weren't, aware of what's happening, or you're too caught up in these little micro moves, that's going to freak you out, and you may get out sooner than you should. So remember, news is going to move things, and this is the market we're in, and it will probably continue to move things, but it could be just a little bit wild and crazy. And I want you to remember, don't freak out. Don't freak out. I know it can be stressful, but take a bigger view and look at, again, just come back to that trend. Because what Chevron did is they did drop. Traders freaked out for a moment. They overreacted. They sold a bunch of stocks. But since that point, Chevron's been rallying. So now let's go back to the daily chart. But I thought it'd be kind of fun to show you what happened today, why we see some stocks that went down today in this energy sector, and even gold. They came down. The sectors that have been so good. But you can see now Chevron here, not at the highs of the day, but coming up pretty darn close. But this whole setup, it was back here on the retirement pattern. That was the reason to enter the trade. What I love about it is then you take emotion out of the way, and you're not trading because of Russia. You're trading because the pattern is there. And the pattern is one that you see time and time again that has a tendency to work. And so then you go with that pattern, and you just trust the pattern and know where your stops are. Because again, sometimes it's not going to work. So you know where your stops are, you put your stop in place, and you give that stock a chance to run. Okay, so I'm just going to pull up some different patterns. Freeport is one that threw a retirement pattern for us the other day, and you probably can see it here. It's a stock that had, so after earnings, they bottomed out and they started an uptrend. Well, look at this. If you know anything about candles, you're seeing a doji at a moving average, and it's followed up by a bullish engulfing candle. So that is the retirement pattern, and it shows you that Freeport is continuing their uptrend. Now today, they pulled back below the moving averages and they started to run. This is another variation of the retirement pattern. And I'll show you, this is a trade that I did today. Now this one may not work out. It has all of the makings of a stock that may continue, but I know my stop is right here. And if it doesn't work out, then I'll stop out. But I want to show you what happened today because I held through this because it's the pattern, and I'm not going to trade on overreaction from news. This is that same 5-minute intraday chart. This is all of today's trading action. Wait, hang on. I want to move. When I have your chat, I can't quite see. Here we go. So you can see the start of today over here on the far left. This is where the market's open today. So this is our 5-minute chart all day long, today's trading action. And if you don't look at intraday charts, don't even worry about it. Just for some of you that do, maybe you'll find this helpful because we had an entry on Freeport this morning and then all of a sudden it starts to tank. So back to, I don't want to see this. I don't love it, but the daily chart never really changed. The stock was still bullish. This was just reaction that, we're shutting down the oil from Russia. We're not importing that. It affected gold. Freeport is a minor stock. It affected mining. It affected oil prices just briefly, just a little blip. And yet the daily chart is still bullish. So that's kind of the idea of what we're going for, is just letting some of the noise smooth itself out. We look for those retirement patterns. We take the trade, and then you know where your stop is. And like I said, they're not all going to work out. But even if this trade doesn't work out for me, and you'll know here, you'll see later today or tomorrow, if it doesn't work out, it's not a big loss. We're looking at the stock breaking below about 46.80. So depending on where you got in, it might even be a profitable trade, even being stopped out, or very small loss or cost of doing business, right? But you can see the other retirement pattern has already played out and it's worked beautifully. And that last one was a run from around $42 and change. So let's just keep it simple. Let's call it a $43 entry. It topped out at about $50. So if you're still in that trade, you're still profitable from that last retirement pattern. And the neat thing is you have multiple entries throughout a trend. So I think that's pretty great. Let's see, should you Freeport? There's another miner that I like, Newmont Mining. This company has kind of a similar pattern when I showed you Chevron and I showed you the retirement pattern after earnings. So remember when we talked about volatility, options before earnings tend to be inflated. What's happening is the market makers make the options expensive because they just don't know how a company is going to announce, and they don't know if the stock will go up or down. So they become more expensive. So to me, there are two windows to trade around an earnings announcement. And if I see a retirement pattern with a stock running into earnings, or maybe even selling off into earnings, because this works in a downtrend as well, then it gives us a place to enter. And I like it. I like the trade. We can get in and we can trade the run into earnings, but the day that the earnings are going to be announced, I would get out of that trade. So something like Newmont, where we had our retirement pattern over here, that's a little bit of a swing trade. It was about 63 to about 67.50. So call it $3 to $4 and change or so on that run. Sell before the earnings announcement, because afterwards that inflation is going to come down in the options. So sell them while they're inflated. You buy them and sell them while they're inflated. You're good. Then when it comes down after earnings, a lot of times you have that next retirement pattern. And we had it on Newmont right in this area, which was another entry if you wanted to trade this mining stock. And the reasons to trade it would be because it's a trend, not because of Russia, not because of necessarily the news, but because it's an uptrending stock and in a sector that's doing really well. And it takes the emotion out of the game, right? So you place the trade, our stop would be right here. We didn't get stopped out. Newmont's up. It's retracing a little bit today. And these are days you can take some profit off the table if you want. So I like this. This kind of shows you how stocks that are moving now, yeah, maybe some of the options are expensive because now they could be expensive because of Russia, but they're going to hold that inflation. Today's news that we're blocking or not importing Russian oil anymore, that did not do anything to bring down the price of options. All it did was add to the volatility of the markets. As a buyer of options, that works for us, right? So as long as these stocks continue their trends, this is going to work. Let me go back a little bit. Do you guys ever trade a stock called Overstock? So this is an interesting one. It kind of is trying to bottom out here a little bit. But what I thought I would show you is what they did when they were in a downtrend. There are plenty of stocks that are trending lower, but I want to show you, while I still have some time here with you, I want to show you the bearish version of the retirement pattern. So it happened over here, and Overstock, they just started throwing a lot of wicks at the top. They were slowing down. This is where I find a MACD indicator to be helpful. But even without that, right in this area, Overstock completely broke their uptrend. So this was done. There was just nothing really to do here. In fact, the last retirement pattern on Overstock went from here to up to this area. So just a little bit of an upswing. By the way, that's still $10, right? So it looks pretty small here, but that was a $10 move. And we never got another retirement pattern setup while it was in an uptrend. The next setup on Overstock came over here, going kind of flash forward about a month. It took a month before that next retirement pattern. So here's the thing. As a trader, I think you want to learn the pattern and then just be patient and wait for it to play out. I always like to say, let the trade come to you. Don't chase the trade, right? Don't chase it, because that's where we all will mess up. So try to keep that, that idea of just waiting for these patterns to occur. This in my Monday call, it's called the 1K Club. I'll meet there and I'll show you the stocks. I'll show you the ones that are setting up different retirement patterns, and I'll answer your questions, and we'll talk through all of the setups, and then stocks that are good watch list candidates as well throughout the week. So if you check out Overstock here, what made that the retirement pattern? Are you guys starting to see it maybe a little bit? Can you kind of see that it came up, it threw this doji at a moving average and it slowed down? By the way, before this, it was already trending lower. It had already started making lower highs and lower lows. So we have the beginning, it's a little one, but the beginning of a downtrend. And then it retraces, and that's that stock taking a breath right here. It retraces. We have that bearish engulfing candle, and we're off to the races with the bearish version of the retirement pattern. And this is where Overstock just tanked. It was $85 in that price point, and it plummeted to below $40. So to see a stock that's cut in half is pretty amazing. So you'll see these both bearish and bullish, which I think works well in these markets because, as we said, we have a lot of stocks that are really bullish, and then we have a lot that are really bearish. But remember, the key is we want a stock that is trending. Now, let's go one step further with Overstock. What is happening here? And the first thing I want you guys to do when you look at your charts is just ask, is it uptrending? Is it downtrending? Or is it sideways? Because stocks only go one of those three ways. That's it, up, down, or sideways. So what do you think we have on Overstock? Anybody want to take a guess? So in order to be downtrending, it has to make a new low. It hasn't. In order to be uptrending, it should make a new high. It hasn't. There you go, Cheryl. Thank you. It's sideways. It's kind of sideways right now. But again, this is a stock that has just been slashed in price. I find today pretty interesting. I'm not ready to jump in bullish, but this is the beginning of the retirement pattern. If our markets cooperate and if things go bullish, if Overstock starts pushing higher, we may be just seeing the very beginning of the bottom here. Now, not quite a full uptrending pattern. It's very sideways. So these require more confirmation to enter a trade, but maybe one to just file away on your watch list down the road that maybe, just maybe, this will start trending. But it's kind of a neat pattern, right? So we'll see. But you can have this as a watch list stock. I think it's kind of cool. Vail is another one that I've liked a lot lately. With Vail, they had another one of those uptrending patterns here. They trended up, they announced earnings, and they had this volatility in this area right around earnings. But this is the retirement pattern. And especially here, it gives you an entry right here when it breaks above that little bit of consolidation. That is that retirement pattern kind of an entry for us. And, even Vail, yesterday, if you guys know this, it's a shooting star pattern. You could use that as an exit. And what that is it gapped up in an uptrend. It's been up for 1, 2, 3, 4, 5, 6, 7 days in a row. That's a long time for a stock to be up in a row. And it gaps up and then it has this little small candle body. It's a shooting star. It's probably going to come down in price. So these are the patterns that I teach you in the 1K Club, and I show you these stocks and these trade ideas. So anyway, I'd love you guys to join me here. I'll show you a little bit about that too, if you'd like. But it's kind of cool, isn't it? So let me know, do you guys like this retirement pattern? Remember, with the retirement pattern, the idea is keeping it simple, keeping it straightforward. Yeah, and again, it focuses on stocks that are trending. We're finding those stocks when they're taking a breath in the trend. So that's really the idea of what we're going here. It's pretty great. Yeah. Cheryl says, very cool, learning so much. I'm glad. That's what I want you guys to do. Get something out of this for sure. Let's see. Teresa says, yes, Markay, you have some really great earnings plays too. Yeah, absolutely. Those are so fun. All right. So here, let me jump back to the slides. And I'll show you a few, and then I'll tell you about how you can join me if you want. But it's not overcomplicated. Honestly, if it was too complicated, I couldn't do it. If I had a superpower, which I don't, but I would say it's taking something complicated and simplifying it so that I actually want to do it, because I don't want to have to be digging around with something super complicated and worrying about all sorts of things. You've got to take the best of what really identifies momentum in stocks and narrow it down and use that and keep it simple. I have to remind myself of this every day, right? All right, let's see. Caroline is asking, on average, how long do you tend to stay in a trade before pulling out? That will depend on the markets. And those are things that I talk about every single Monday. We talk about what market condition we're in. Right now, we are not in a park money, leave it there for months kind of a market. It's just not. Things are choppier, more swing trading. So I think I even said it earlier, more of like a 3 to maybe a 5 to 10 day kind of a trading market. But even that, this isn't day trading. You could take this strategy. There are retirement patterns on intraday charts, but that's if you want to do that. You don't have to do that, right? So these things, they aren't rare. You see them all of the time, and it's a pattern. Every single day, you will see it on different stocks out there. So as we look at, the patterns that I showed you today, you're probably seeing that a lot of them, they look pretty similar, right? And there'll be some that are a lot better than others. And we get that from things like the candles and the volume and the chart history, moving averages, MACD lines, the Bollinger Bands, all of those things. I'll show you how they give us the trades and the trends with the higher probability that the trend will continue, which translates into a higher probability that we have a good trade, right? So if you guys will learn and then follow the retirement pattern, you have a proven strategy that over time will work with some nice consistency. And it maybe until, you decide to retire. Maybe you just will decide you want to do this forever, because I love it. All right, so here we go. If you're interested in learning more about this, what I want to do, I want to invite you to the 1K Club. This is the class that we meet every single Monday. So there's no commitment. There's not a big deal. I'd love you to try it. It's only $49 for an entire year, and it gets you involved in my trading community. It's way more. I'm constantly told I shouldn't do this. And I mean, I say that. I literally have been told, don't do this. This original 1K Club for the $49 was only supposed to be a newsletter and a stock of the month. And it's not enough. I want to have more contact with you guys, and I want to be able to teach you over time. So I added in this Monday call so that we can have a chance to hang out, and I'll teach you things. You can ask questions. Feel free anytime. You just see, I'm not afraid of your questions. I love it. Again, makes us feel like more a part of a group, and we all learn and grow together. I think that's super important. So every single Monday, I'll hang out with you live in person. If you can't make it live, don't worry, because we record every single call, and you'll be able to watch it shortly after our class. By the way, it's at noon Eastern every Monday. Now, every month you're going to get a newsletter where I'll break down the markets, and I'll give you some stocks that we're watching. And then you have hours and hours of educational videos in your members area. There is a ton there. So whether you're brand new or been around for a long time, there's going to be something that you can learn from those education videos, no doubt. Yeah. I love this. Al says, I like the simple approach too. I love it. So here it is, guys. I'd love to have you join the group. No pressure. And if you sign up and you check it out and you decide it's not for you, we will always take care of you. We'll refund your money. No worries. But I'd love you to go to MarkayLatimerTrades.com. And if you just do /1KC, that's for the 1K club, you can join this group for $49. So it's, again, the whole year, $49, no pressure, nothing. It's just us hanging out as traders every single Monday. Let's see. Oh, I love it. Alan said, I joined 1K Club last week. Monday, took 2 trades, one profited 36% in 1 hour. The other I spaced on, took it the next day and still got 50%. That is awesome, Alan. Congrats. I love hearing that. Nice. Thanks for sharing. I appreciate that. Yeah, I mean, it's really just real traders hanging out, talking about stocks and sharing ideas. That's it. Feel free to bring stocks you have questions about. I'll give you my opinion. I'll show you how the charts look. But that's what this class is meant to be. Just us hanging out, all getting better at trading and finding the different changes in the market, because market conditions do change. We went from kind of last year, more of a trending market to now much more choppy, volatile market. And it's really cool to have a place to come back and regroup as you start out the week and get you set for the week ahead. Right? I love it. All right. Awesome. You guys are great. Thank you for letting me come share a little bit of what I love to do with you. I hope you enjoyed it. I hope you learned something. And I look forward to seeing you Monday in the 1K Club. So there's the link. Check it out. It looks like David put it in the chat for you guys as well. So you can just copy that or click on it and you're set. All right. Let me know if you have any last minute questions. Otherwise, I'll sign off. I'll let you guys enjoy the rest of your event. All right. Thank you. Thanks, everybody. I appreciate it. I'll see you later. And happy trading, guys. We'll see you Monday.